Finally, the time has come for me to do an update of my CPF investing portfolio performance, and that's after 3 years. Because I started investing my CPF since 2021 April, and it's time to review the performance again. And if you remember last year, my 2023 CPF investment portfolio video performance, it was mediocre at best and did not even beat CPF compounded interest rate. And that video got around 18,000 views because it was quite negative, I think. And for a quick recap, year 2021 was a bull market, year 2022 was a major bear market, year 2023 was a bull market, 2024 is still currently a bull market. So the tides have turned, but it is only accurate as of the recording date, which is currently 20th May 2024. And if you are also investing your CPF but you don't know where to invest, then maybe you can join us at over 15,000 members at the Harding Mahdi SG Telegram group to share your ideas. Maybe the first question to answer is, should you invest your CPF? Because a lot of you have accumulated so much in your CPF after so many work years, like your CPF OA, maybe you haven't started buying property. It has been accumulating up to $100,000 already. So your hands are very itchy now, where to put my funds before I buy property. But I need to caution of this thing called opportunity cost, because your CPF OA, although it's earning only 2.5% per annum interest, but you can look at other ways where it can supercharge your OA returns. For example, if you were to invest your CPF OA into the current T-bills, they are giving around 3.7% per annum of return. And if you were to transfer your OA to SA, which is an irreversible option, you can get up to 4% per annum. So you should not compare to a 2.5% opportunity cost. And on top of it, you have to add in an equity risk premium, because you're now undertaking the market equity risk. And how much are you going to put the number to that? For some people, it is 3%, for some people, it's 4%. So, for example, your own equity risk premium is 4%, which means you need to have 4% above the risk-free rate. So we just take the higher number, which is the special account 4% interest, at a 4% equity risk premium. You need to achieve more than 8% per annum in order to make investing your CPF OA worthwhile. So if you're not confident or your risk appetite is not that large to earn more than 8% per annum, I think it's better to leave either inside your CPF OA, or you just invest them into the T-bills for 6 months at least. Or as a most desperate measure, just transfer to SA. But know that it's irreversible. I'm not telling you to do it. I'm just saying it is an option. So enough of the pack talk. Let's go to my endowers portfolio, which is where I invest my CPF OA with. And if you do not have an endowers account yet, you can sign up with my link to get $20 free credits. Now, one of my portfolio is in the Amundi Index MSCI World Fund, which tracks the developed markets across the world. So it's rather diversified. To be exact, the index is called the MSCI World Index. So it does not include the emerging markets, only the developed markets. The fund level fee of this fund is 0.1% per annum, and if you add an endowers service fee of 0.3% per annum, there is a total expense ratio of 0.4% per annum. And the portfolio value right now is around 29,000 Singapore dollars. So that represents a $4,000 unrealized gain, or a 16% simple return. So not bad, right? I started this portfolio like late August last year. So the market has been good since. That's why 16% in less than 1 year. That was what I expected. But past performance does not guarantee future results. That's the disclaimer. Anyway, I've stopped contributing to this Amundi Index MSCI World Fund because it has major overlap with my other fund, which is the Amundi Prime USA Fund. Just to be clear, this video is not even sponsored by Endowers at all. It is just what I use for my CPF investing platform. In fact, if you want to use cash and invest, there are much better platforms out there, and one of them is the sponsor of today. When you are looking to trade options for income, the key considerations are definitely pricing and features. Webull offers competitive pricing for options, and it's really easy to use even for beginners. To trade options, go to your Webull app, click on Markets, then Discover and Options, and this is where you can look at the various data before you do trade options. Select your favorite stock picker, then click Options, look at the date, strike price that you want to select for your options trade. You can also select single or covered option at the bottom. Webull also offers low commission for options trade from 55 US cents per contract with 0 platform fees, helping you to save costs in the long run for options traders. For the welcome promo for new customers only, fulfill the requirements for funding and trading for the specific amounts and maintain until the specified date, and you can get cash voucher rewards of up to 1,050 US dollars, plus an exclusive Moneybull Interest Booster of 180 days, which could elevate your USD Moneybull subscription return to up to 8.4% per annum return. There is also a transfer in due for both new and existing customers who have not done any shares transfer to Webull. There are 3 transfer in tiers from 10,000 US dollars to 150,000 US dollars worth of shares, and maintain for 90 days to get up to 2,000 US dollars of cash vouchers plus a bonus of 500 US dollars trading vouchers plus a transfer out fee subsidy of up to $150 with my exclusive link. Terms and conditions apply. So don't miss these offers. Use my exclusive link or scan the QR code right here to get your Webull account today. Alright, so I covered my first CPF portfolio, which is the Amundi Index MSCI World Fund, but that is already in the past. I stopped contributed to it, which is why I concentrated my CPF OA investing funds right now into my second portfolio, which is the Amundi Prime USA Fund. The fact is, I didn't start with this fund from 2021 because it was not available back then. Back then, it was Lion Global Infinity US 500 Fund. Then halfway along the line, I transferred to Amundi Prime USA Fund for lower fees. So this fund tracks the top companies from United States large and mid-cap index. And the fund level fee is only 0.05% per annum. Add on the endowment service charge of 0.3% per annum, or total expense ratio of 0.35% per annum. And I've already clarified with endowers, the 30% dividend withholding tax still applies because this is not an ETF that is domiciled in Ireland. It is domiciled in Luxembourg. So there's some misinformation out there on the internet saying that Amundi Prime US is like 15% dividend withholding tax. That is not correct. Alright, I'll clarify with endowers. But anyway, the dividends will not be issued because it's a dividend accumulating unit trust. Alright, so there's no like cash generated to you every quarter, every year kind of thing. All the dividends received will be reinvested back to the fund. So for this Amundi Prime US Fund, my capital is around 47,000 Singapore dollars. And as of the current date, the portfolio value is around 58,000 Singapore dollars now, which means an unrealized gain of around $11,000 or 22% in simple returns. And how I invest in this fund is that I dollar cost average a fixed amount every month on the first calendar day from my CPF OA. So everything is automated. I don't have to meddle with it. But I know some of you prefer lump sum and everyone has their own preference. So don't need to argue which one is the best way. Just choose the best way that you like. So with my two CPF portfolios, I'm going to do a combined performance review. And looking at my endowers dashboard, there is a simple return of $15,000 or a simple return of 20%. And it says that this is a simple measure of how your portfolio with endowers has grown since you first invested. But if you look at the other metric, which is modified diet rate of return, this is 50% for 3 years. And this is a more accurate measure of your performance by considering both the time period and the size of cash flows in the duration of the investment. Then the most obvious one, which is the annualized internal rate of return for my portfolio, is around 15% per annum. This is another measure to calculate the investment's overall return rate regardless of when the cash flows occur. But I guess the most accurate metric, which is time weighted return, is not available for my portfolio because my portfolios have been transferred here and there. So maybe my portfolio is not applicable to be tabulated like that. So you see 15% per annum growth, 50% over 3 years. I think I'm quite satisfied lah. Finally, my CPF portfolio has raised above the water because I remember in 2022 and early 2023, my portfolio was like going to hell. So the market tides have changed. But I'm not telling you to go all in into investments because currently the market is at all-time high. I think the main purpose of this video is really to show you the power of long-term investing. Because I started since 2021 and every year I will do an update of that portfolio. And if you look at over the years, how have my portfolio changed in value? And I still stay in the same portfolio regardless up or down. You can consider this as long-term investing already, right? And this is how long-term investing works, with consistency and discipline without going in and out of your portfolio, other than to transfer to different funds for lower cost optimization. So I hope that it has brought you some insights and look forward to my next year update on my CPF investing portfolio. And if you want to know, other than CPF, if you want to use cash to invest, how am I doing it right now as of the current situation, then I can refer you to a previous video right here.